Hi, when you want to go bullish on a long-term investment, the default strategy is to buy stocks. But if we buy LEAPS call options instead, we can be bullish on the underlying over the long term as well and use the increased leverage on options trading to increase our return on investment. And we'll also share tips on finding the best long LEAPS call options to trade. If you enjoyed my video about trading options, please like and share my videos and subscribe to my channel. Thank you. We'll talk about 4 key points today. 1. What are LEAPS call options? 2. Why buy a LEAPS call? 3. What are the key points to profitable LEAPS calls? And 4. How to find the best LEAPS calls. LEAPS call options is an options contract with at least 1 year to expiration. A long LEAPS call is a long-term bullish trade with a great return on capital. If we believe the PayPal stock price has reached the bottom and anticipate a bullish trend, we can buy a 90 delta LEAPS call at $40 that expires in a year. The trade requires $4,210 in buying power and will be profitable when the stock price rises beyond $82.1 in a year. A long LEAPS call has higher leverage than buying stocks and will have a greater return on capital if the stock price rises as expected. A stock trade that uses a similar $4,200 in buying power can purchase 54 shares of PayPal stock. The trade becomes profitable when the stock price rises beyond $78. By comparing the two trading strategies, we can see the probability of profit is the same for both LEAPS calls and buying stocks. If we expect the PYPL stock to rise to $100 within a year, the long LEAPS call will make 42.5% in profit, while the stock purchase only makes 28.7% in profit. When buying LEAPS call options, we want to choose deep in the money 90 delta strike prices to increase our probability of profit. We also want to have more than 1 year to expiration to give the stock enough time to make the call profitable. Let's compare deep in the money and at the money LEAPS call options to see the impact of different deltas. Even though the 90 delta call requires more buying power, the higher delta makes the options value follow more closely with the stock price movement. The lower strike price also gives us more room to profit and a better break-even price. If we compare the different call options expiration dates for the same strike price, we can see a LEAPS call that expires in a year requires 9% more premium than a call that expires in 2 months. But the LEAPS has 6 times more trading days for us to wait for the stock price to meet our bullish expectation. We also need to be aware of the increasing theta decay when the LEAPS call is close to expiration. So we usually buy to close our trades around 45 days before expiration, no matter what. So we can close our position when there is still enough time value in the trade. A long LEAPS call is a long-term bullish trade that works well with the bullish value stocks list to find undervalued blue chip stocks. We can use upside to order the list to find BABA as one of the most undervalued stocks. The $276 fair value means the stock price has a potential 134% upside. The long signal days shows Alibaba reached the bottom 16 trading days ago. Since BABA is a growth stock that doesn't pay out dividends, there is no point to hold stocks, which makes this a good opportunity to buy LEAPS call options. A second look at the BABA price chart confirms the stock reached a low on June 3rd, roughly 16 trading days ago, and has been on the bullish run ever since. We can be confident in buying a LEAPS call to take advantage of the bullish outlook. A long 90 delta BABA LEAPS call that expires in a year requires $6,590 in buying power. if the stock price reaches the $276 fair value in a year, the return on capital is 227%. Now you know how to buy LEAPS call options to profit from a long-term bullish stock, so you can take advantage of the higher leverage to make more money than simply buying shares.